Hello, and welcome to the second edition of PSR, which stands for People Speaking Rail, of course, in this context. I'm one of your hosts, Mike Baudendistel, Head of Intermodal Solutions here at FreightWaves, joined with my colleague, Joanna Marsh, Senior Staff Reporter who focuses in on the railroad industry. Joanna, how are you today?
I'm pretty good. And how are you, Mike?
Doing well. Yeah, nice and warm out here in Dallas. Going to go for a run
Oh, goodness.
after we finish recording this.
Yeah, I guess it's
Which
typical
I guess
weather
it's been
here.
Yeah, I guess it's been a mild winter for the railroad industry as well. We'll see if that holds up or whether a snowstorm eventually will create congestion in places. But so some of the things I think we want to go over today, so a sort of short list here, is you went to the Transportation Resource Board annual meeting. I know you're going to write up some articles on that. John Kingston already has an article up on that, so we can talk through those things. And there's a good article from Greg Miller discussing the import trends and how we're sort of back to pre-COVID levels there. And we can talk and sort of put our heads together and talk about how that's likely to impact the intermodal industry. And then we can also talk about railcar manufacturer Greenbrier reported earnings on Friday. That was an interesting one, I thought. I know you wrote up an article on that, closing that Gunderson facility in Oregon. So we can talk about those things today. But first, just really wanted to talk to you about sort of your experience at the Transportation Resource Board annual meeting. Why don't you explain sort of what that is, why it's important, and what you learned there?
Yeah. So the Transportation Research Board, excuse me. I get TRB and STB messed up, and I get not messed up, confused. But the Transportation Research Board, yes, they have an annual meeting. I think last year was their 100th year anniversary. I could be wrong by that, but they've been meeting for a very long time. Regardless, it's usually in January and usually in Washington, D.C., or at least the recent ones have been. I don't know about the ones, 100 years ago. But it's really neat. You have hundreds, if not thousands, of transportation professionals nationwide and around the world actually come to this. So you have, your local municipalities, and you have your state representatives from the various Department of Transportations, and then you have people from North America and Europe and Asia and just everywhere really coming together. And it's not just rail, of course. It kind of the gamut of transportation. So you have all your different modes. You have your public transit. I feel like just kind of looking at the various panels that were highlighted this year. A lot of the panels kind of looked at the public transit angle. So you have that, and then just kind of how people who do this every day and kind of looking at best practices and research trends. You also have some grad students coming in, kind of sharing their research ideas. So it's a neat thing, and I don't know if I can like fangirl on it, but I actually like going every year. And as a side note, they have these. They have like TRB, like these big letters, like like sitting near the entrance, and people like to take selfies and post them on Instagram or something. And I always take pictures, and part of me is always like, oh, I kind of want to stand next to the TRB sign. But anyway, it's kind of neat to go. So for freight rail specific, okay, let me backtrack a little bit. For railroads, obviously they do. They talk about the researchers and planners and engineers look at all aspects of the railroads. And so, you have, of course, a lot of U.S. Based people talking about things, but you also have a lot of people coming in internationally as well. So you can have that nice comparison between regions and countries and other parts of the country. And it's kind of the topics within the railroads run the gamut from public transit again to sort of latest in operations research. Actually, this year's a lot of the panels this year were heavily leaning towards the research end. So you have a lot of latest in operations research, safety research, looking at track inspection and autonomous trains, and then you have a little bit too of the economic perspective as well. So, John Kingston wrote something the other day about the shift in volumes to the Eastern Gulf Coast ports, and then I attended a panel on freight rail, sort of the economic take on things, looking at the regulatory angle, but also, where things might be headed next in terms of, PSR, really. That was the topic of the panel I attended. Was not really the topic, one of the topics.
This Transportation Research Board, I'm not all that familiar with it. So are they making recommendations to the federal agencies of how to regulate the various modes, or what are they doing?
No, not necessarily. I mean, I think it's just, it really is just kind of a lot of sharing of ideas of what has been going on within the industry, and sort of people's takes on, what's next. Because, keep in mind too, is that you could have people attending a session who might not really be familiar with what's going on within the industry, but they do have, either they're interested in it, or there's an element of their work that involves, rail or whatever topic. And so it's not necessarily to provide solutions, but then of course that said, there are planners and transportation planners and other companies that are involved in it, that kind of look for potential solutions as well. And actually there are speakers from the federal government who come in. Pete Buttigieg of the U.S. Department of Transportation Secretary was scheduled to speak Wednesday, I think, about electric vehicles, and John Gallagher from FreightWaves attended that. So, so there's just a lot of topics that they cover.
Okay, so big industry conference. You go every year. What were the topics of the hour in the sessions that you attended on the railroad industry?
Yeah. So the session I attended was looking at freight rail kind of from the economic and commercial perspective. And so there were 3 or 4 panelists, and one of the questions of in the presentation was, what's next after PSR? And of course, it's still anyone's guess, really. So it's not, it's not like anyone, this is what will happen after, PSR or, whether continuation. But that was a neat session to attend, because you had that explanation by the panelists of what PSR is and sort of what the implications have happened over the course of the last several years, which we've talked about and reported on here. But then what's next piece is interesting. One of the panelists, he came from Deloitte, Canada, and specializes in sort of the M&A aspect of things. And so he was kind of saying that, like, one thing that could happen is that you still have a lot of infrastructure investment firms interested in M&A in the rail space and the transportation sector, with the idea of, perhaps the next thing after PSR would be the creation of these sort of, I think you called them giant rail industrial hubs. You see, like with BNSF, their $1 billion plans to create an intermodal, a yard in the western
That's
US.
The one in the high desert in California.
Yeah. So you have that proposed plan there, and not even just by railroads or commercial ventures. I mean, even within, if you look at like infrastructure funding and you look at the grants and you sort of see like public-private partnerships where you have public governments like invested in creating these projects that have a multimodal element to them. And so, he talked about the possibility of creating these these industrial rail yards, whether it's commercial or public-private partnerships, and sort of something happening akin to like what had happened with the airline industry in the 1990s, where you have like a hub and spoke model. So you have all this and all this activity happening with that rail access, and then you have being able to transport goods in and out. The other interesting thing, of course, with this, so you have inland ports that are kind of related to this potential venture or potential route, and you, what was I going to say? Yeah, so you have the thought will come to me in a second, but yeah, so that was a neat thought or a neat.
Yeah, I mean, I think it's one of the impressive things about that announcement last year between BNSF and JB Hunt is you're sort of collaborating with the two different carriers coming at this from a different angle. Of course, those have always worked very closely together, but that huge investment, it's not just JB Hunt investing in containers, it's BNSF investing in the terminal infrastructure, all of those things. So it does seem like with transportation specifically, you need to have a lot of different parties coming together in order to make something happen. And so much of the congestion is tied to either certain locations or terminals, or in this case, a highway, certain interchange points that all these just different constituents have to come together. I also wanted to ask you on one of your points here in our sort of shared notes for the show. You talked about the tension between the railroad Class 1 carriers and their investors, and you have the new CEOs in CN, NS, and CSX coming at it from more of a commercial and marketing background. I guess that new CSX CEO was from the automotive industry. So kind of interesting that these are not sort of in the mold of Hunter Harrison, and maybe that's because they're trying to push to find volume growth, which is what has eluded the railroads in light of all the service issues, in light of all the focus on having the margins that are at least as good as the peers. And it does bring up this question that you ask is, what will happen in the investment community if operating ratios, increase and their margins decline? I mean, I think last year was one of the first year in a very long time the industry had operating ratios that unfavorably, increased because they, took on some additional resources. And now the Surface Transportation Board wants them to take on even more resources, so the whole network isn't shut down if there's a polar vortex or flood or something like this. I mean, how do you see the dynamics playing out between the Class 1 railroads and the investment community?
Yeah. It's interesting because there's been kind of more of I feel like there's been a focus and attention on that, and it's interesting too because CN the new, on one hand, the new CEO Tracy Robinson, actually she's been there for over a year now, comes from an oil and gas background, from a shipper background, and she was put in there because an activist investor disagreed with how the former CN CEO Jean-Jacques Rouet handled the plans to merge with Kansas City Southern. And it's also interesting too because the activist investor, I think, wanted to install Jim Vina into the CEO spot, and Jim Vina has extensive operations experience. And so so that was something that was also brought up in the session today, or Wednesday, which is that I think there is a push within the industry, from what I've seen, in terms of trying to get closer to, I guess, closer to the customer and closer to perhaps trying to increase volumes and capture, sort of reconnect in a way. But then you have that pressure on the OR, and then you also have even within the investment community, like Tony Hatch, for instance, you have people saying, well, can we sort of, if you're an investor, can you look at the longer term sort of return versus a short term return? Because the lowering the operational ratio and other things, those have like those short term effects. But is there a way that you can look at railroads and invest in them with sort of eyeing the long term health of the industry and also of individual companies?
Yeah, I think that's interesting for sure, and we'll see. I mean, I think some investors take a longer term approach. I mean, you sort of have on the extreme end, Warren Buffett acquired the BNSF and called it a 100-year investment, and then on the opposite end of the spectrum, you have hedge funds or these activist funds that go in. They're kind of more renters of the shares. They push to sometimes change out management teams, change tactics, do things that are going to have a better operating ratio or a better return on invested capital, and then sell the shares at a higher price. And they sort of will pick on the companies that have the worst operating ratio. And I think it's a situation where it wouldn't surprise me if the operating ratios for the industry as a whole rise again this coming year as they take on some more resources, because now I think it's getting a little bit more clear when you have an STB that is this involved and this determined to improve service and really understands these issues that the shippers are facing, that the railroads, in order to avoid sort of big changes in regulations, I think it is in their best interest to resource up and have that good service. So it'll definitely be an interesting thing to watch. You have a number of other topics here, so I want to move on. John Kingston wrote up a piece also from that TRB meeting. East Coast ports reaping rewards of investments. That's up on the site. You can check that out. And it was interesting as he talked about how there's this. Of course, we know about the shift from in the last year from the West Coast ports to the East Coast ports. He brings up the point that there's maybe a shortage of warehousing space on the East Coast, which is something that we've heard a lot about sort of throughout the country in the last year. But sort of increasingly, lately, there's been more data points to suggest that maybe we're overbuilding the warehousing capacity. We have a Sonar chart, the Logistics Managers Index on warehousing prices that shows a drop there. And I went into more in depth in this and earlier in the week in the stock out to show we have about CPG industry. But here it's like a lot of those warehousing prices have started to crack. Now maybe it's not as true in the East Coast as John Kingston brings up in his article, but there's a tremendous amount of warehousing space that's under construction. A lot of those don't have leases yet, and so it seems like those prices are cracking there. And I think it brings up sort of an interesting debate about whether this shift that we've seen from the West Coast ports to the East Coast ports, is that a sustainable shift? Have a Sonar chart on maritime import shipments to that effect that shows it. There we go. So we can see in this chart, for those of you watching the video portion, Port of LA in white, you see that was above the ports of Long Beach and Orange and New York, New Jersey in blue. But then, you see in the last year, Port of New York, New Jersey got to be the biggest in imports. That's at least by shipments, which is not necessarily TEUs, but shipments can have differing numbers of TEUs. But the trend was sort of there where New York, New Jersey got to be more of an importance. There's a location where there's not a lot of excess warehousing space. But the East Coast ports have invested tremendously in capacity so they can accommodate the larger vessels. And interesting also, there's more space for warehousing on the Southeast. And so if this is sort of a temporary shift and speed is more important, and maybe the shift of manufacturing out of China into Southeast Asia or even sort of the northern part of Asia, where it makes more sense to use the Suez Canal rather than the Trans-Pacific, those are all trends to keep in mind when evaluating the port share shifts. But if the shift to the East Coast ports is permanent, I mean, that's a negative for intermodal because most of the population lives within 1 day's drive of the East Coast. You sort of think about volume coming in through the West Coast as having a 65 or 70% chance of going rail intermodal to sort of those Midwestern consumption centers or even the Eastern consumption centers, whereas in the East Coast, maybe it's only a 20 or 25% chance. So I think that's something that could really have a big impact, and sort of gets to our earlier discussions of do the railroads have a revenue for volume growth? It can't all be taking costs out of the cost structure as we get into what you're calling a post PSR regime. I think part of that, what that post PSR regime has to look like, is revenue development in terms of volume growth. Also have there's also a good article up on the FreightWaves.com website, just hit published by Greg Miller, and Greg is talking about the import volume and how that's now back to pre-pandemic levels, and have a chart from Port Tracker. And so he's using data from the National Retail Federation and American Shipper is the company that FreightWaves acquired that follows the ocean industry. So what you can see here is in 2020, so of course, the big increase in imports, those really stayed elevated sort of throughout 2021 and didn't start to crack until really September of last year. And now we're at a situation where those imports in January, roughly in line with pre-pandemic levels. And in December, looking at a couple different data sources, this Port Tracker says imports were down 10% in December. Descartes said that they were, down more like 19%. Descartes, uses a larger number of ports, but by any measure, sort of these imports have fallen. I think we sort of understand why. Those are high. Their inventory levels, consumer spending is pulling back. But this is, gets to an interesting question for intermodal volume in 2023. Do you think the industry can see intermodal volume growth in 2023 in light of potentially at least falling imports for the first half of the year? Not clear that's going to be true at the end of 2023, but I think in the first half of 2023, intermodal is going to contend with falling imports. It's going to contend with a weak truckload market, has a big impact on those lanes that are competitive, and potentially lower consumer spending. So, to Joanna, I wanted to ask you: do you think are we going to have another down year in your estimation for intermodal volume growth? Last year was down about 5%.
Mm-hmm. Yeah, that's a good question. I think if there is a down market, will the railroads be able to sort of gather themselves together and use that time to improve service? I think service is still kind of the big question mark. Of course, this isn't just related to intermodal, but I think, and this was also mentioned, the TRB thing, that there is, I actually remember my other point, which was that, so you have these facilities that want, that want that rail access, but they also want the truck access because they while they'd like to use rail, they also want to make sure that they have that access to truck. And of course, that's not just intermodal, but I think if volumes do go down, like, will it be an opportunity for the rails to sort of gather and huddle again and sort of work on continue to work on in service, especially with hiring efforts and getting that, continuing that effort, or will it be more of the same? I think people are really looking at the service issue, whether it's manifest traffic or intermodal.
Yeah, it does feel like this is a kind of a make or break year for rail service with so much on the STB's docket that they're going to look at sort of all this service data that they now require the railroads to publish that they never required before, and potentially maybe this is a year where intermodal can gain market share, which I think is where you were going with that. With if there's a little bit less congestion, if these hiring practices pan out with more resources, then it does seem like this could be a year of market share gain after I would say last year and really last 2 years, intermodal lost market share to the highway. So I think that's something that we're going to be watching very closely, on this show and in your research, throughout this year. But that's really all the time we have. But I want to thank you for joining me again. It's always fun to do this. PSR. And if those people wanted to subscribe to your newsletter on railroad industry, how do they do that?
Yeah, so there's a link on the FreightWaves website, and I believe it's in my articles as well, where you can click on the page for the newsletters, and you can click on for the rail newsletter, and there are also all the newsletters that FreightWaves offers. So you can click on them all and just receive a bevy of information about freight transportation.
That's great. And then on an upcoming show, I think we have someone from the AAR. So we'll ask them all the hard questions about service and whether they can grow the volume and whether the people that were recently hired are going to stick around when the going gets tough. But we'll see. But with that, I think that's all we have, and hope everyone has a great day.